Folks, we are live. Welcome to Sunday Night Futures Live. What we're going to be talking about tonight, obviously, are the pre-market futures action. We're going to be talking about more corruption coming out of D.C., just a never-ending betrayal of this country out of D.C. You have more potential shenanigans in the by the Aleutian Islands with the Chinese and Russian military now. And we'll talk about why they're so emboldened at this point in time. We're going to talk about Apple's earnings last week. We're going to talk about the breakdown on the triple Qs. We have a lot to go over. So let's talk about the futures action first. But you know what? First comes you. Let's talk about you and let's say hello to our viewers. Pete, Mr. Pete, welcome. Eric, welcome. Good evening. All right, slow night tonight, but everybody's out there enjoying the weather, I guess. Trader Isaac, hello. And Tim, long hot summer for landscapes. I bet. I bet. All right. The futures are open. Danny, welcome. Hey Bob, thank you for me. Okay, you're welcome. Let's people popping in. Great stuff. Talon, welcome. Okay, let's take a look at the futures action. I'm going to share my screen before I forget to do so. And we have what I expected. I did the week ahead commentary and also best stock charts for the new trading week. I posted that today. And if you're not on our email list, enter your email in any one of our email lists below. You'll get the week ahead comment, not the week ahead commentary, the best stock charts for the new trading week. And wow, crude is ripping. I did not want this. Let's go to the S&P 500 first. And the futures are doing kind of what we expected. They're up. All right. So we're coming off of a brutal close on Friday in the markets. And I suspect that what they're going to do is they're going to try to paint the tape tomorrow morning. They're going to want bright green futures. You're going to have the talking heads on CNBC coming out and saying, wow, what a buying opportunity this presents. They'll paint the tape on earnings. They're going to make it seem as if the best market in the world with GDP growth of 2.4%. They won't tell you a lot of those jobs were government workers. They won't say that, non-productive workers, but that is what it is. E-minis just popped a little bit here. I suspect that this is going to get stronger throughout the evening. We're probably going to have a solid open in the morning. I would be surprised if we don't. Is it possible? Of course. Now, the question that everybody should have going into the new trading week is, do I buy? I would not. I would not chase the bright green futures. I would not chase an up market. Look at what happened on Friday. Think about it if you were the poor son of a gun that chased that market up higher and how you felt when it rolled over and broke down to new lower lows. Please do not chase the bright green futures. It's like a diamond jig to a barracuda. These talking heads on CNBC and their banksters want you to buy the market because they need a pool of liquidity to sell their big positions into. Understand the mechanics of how all this works. They don't want me telling you this stuff. This is the stuff that Wall Street doesn't want you to know. So E-minis up on the session so far. Again, I'll bet you a nickel they continue up higher. NASDAQ 100. Also up by spot 20%, probably going up higher. Let's see if we can get the rut up here. Here we go. These are the micros. They're up spot 13%. Initially, they tested the lows of Friday, buyers below. These bottoming tails, they tell you it's a signal by the market that there are buyers below. So there are bids down here, and they're taking the equity market across the board higher. Now, what we want to take a look at here is the US dollar. You remember, if you joined us on Thursday night, we were looking at a dollar on a weekly time frame that was breaking out on a weekly chart. And I said, one trading day left to go. Let's see if it can hold this breakout. Fast forward to Friday, it could not hold it. It pulled back. That allowed gold and the gold stocks to rally on Friday. Do they hold up? I don't think so. Uh, Dollar on, it's flat. It's flat. Not much happening here. Let's check in with the euro. Usually there's more action on uh, the euro and yen this time of day on Friday than there is on the dollar. I usually have these prepared in advance, but I was late. Euro, euro catching a bid. This is a 5-minute chart. So up fractionally, yen also up fractionally. So this is dollar bearish. So I suspect that as we bring up gold here, we're going to see a positive number for gold, and there is. Gold moving up higher. Look at the bullish reversal bar on the 4th in the morning, and they didn't look back. So it looks like we're going to get a continuation move higher, very, very tight. Bollinger Bands 5-minute chart. So this could squeeze up higher pretty rapidly. Moving on to silver. SI. Silver moving up higher as well. No great shock. Let's check in with the other metals. Precious. I didn't want that. Palladium down a half percentage point. Platinum up fractionally. So the weaker US dollar helping precious metals move up higher. Checking in with energy stocks, or energy, I should say, light sweet crude. It's up nearly a half percentage point here on the session. If you're out there and you're worried about inflation, well, this is what you got to worry about. This is a problem. Home heating oil, wrong chart. Try that again. Home heating oil ripping up. I bought a whole bunch the other day, filled up that tank. We're looking good. Nat gas, we have a position in nat gas, bias long, and we're up now, spot 2-3%. Looks like we're going to move up higher here on nat gas. We're using the ETF Boyle. We have a strangle, which is a neutral position. We have the call side protected with a bull call spread. Bitcoin up a half percentage point. Nice. We'll take that. I dollar cost averaging tomorrow. Let's go take a look at a weekly chart. I want to check in with ag. I do not suspect that it's going to look good because the DBA was down last week. Corn prices broke support, closing near the lows of the session. Soybeans, very close to breaking. In fact, they broke support. This is last week's candlestick. They broke support. So expect a bid on soybeans in an effort to try to recapture support. Shorts are going to lean in there. I would not be a buyer of soybeans. I think that trade is by and large dead, especially if we close down below 13.16 on soybeans. Wheat, continuation breakdown on wheat. So ag is coming in. I think initially we're going to get a bid. They're going to try to trade it up early on in the week. Then it's going to fade. We're going to break to new lower lows on agriculture. I didn't touch upon the Dow. Let's take a look at that. Let's go to an intraday chart, 5-minute chart. We are up spot 1.4%. So across the board in equity land, we're stronger. In terms of precious metals, stronger. In terms of ag, weaker. Actually, we're up now on ag, but I suspect that that's going to fail. Energy, stronger. And let's check in with one at least. Industrial metal, technically two. We did silver. We did gold already. We don't need to go to this one again. Where is copper? Dr. Copper. Here we go. Dr. Copper down on the session. How do we do last week? We're at the verge of a breakout point here on copper. We're in the apex of a wedge formation. I think this is going to get resolved up. Let's go back to comments for all those who checked in a little bit later. Talon, we already said hello to. Whether Netherlands is bad. Jasper, hello. Is bad. So here we are. My daughter just got back from there. She went to school in Siena, Italy, and then she did an internship in the Netherlands, Brussels. TF Hatter, hey brother, welcome. Randy, welcome. Seymour Rivers, the man. Thanks for that audio check. Appreciate that. Larry, the market is poised for a rapid fall, a failure, a come down, a descent. Absolutely, I agree. TZ Bart, welcome. RB, hey Bob, happy Sunday. Can you please go over RBLX Palantir? I think Palantir reports this week, don't they? Let's keep that in perspective. If I'm right on that. If I'm wrong, ignore me. RBLX, PLTR, APLS. Okay. Can you look at A? Is that the London Stock Exchange? Pete? If that is, I don't have access. Okay, APLS. Patrick, hey brother, how you doing? Randy. Okay, so RBKX. Did I write that down wrong before? RBLX. RBKX. Is that a different variation of RBLX, Randy? Yeah, they do. Okay, good. Thank you for that. Yeah, so we do have, yes, thanks, Pat. So we have earnings on these names. So let's keep that in perspective. The charts really, I don't put a lot of emphasis on the charts too much. APLS. In front of earnings. Okay. No worries, Randy. Okay. Let's get to it. Okay. So last week we had jobs data that came out. This is after the Fitch downgrade of U.S. debt. U.S. adds 187,000 jobs in July and points to hiring slowdown. Wages still high. The most important segment of that headline is this: wages still high. This can keep the Federal Reserve pumping up interest rates. I don't think that they will. I think that they're done, because I'll go to the chart in a moment. I won't go to the cause right now. I highlighted a couple of topics here. Wages rose 0.4% in July. The increase over the past 12 months was unchanged at 4.4. So the interest rate hikes that are still coming through the economy, they haven't all hit yet by any stretch of the imagination, yet wages are still high. And where does the Federal Reserve want them? At 3% or less. They want them at 3% or less with inflation at 5%. Okay, thank you very much for the pay cut. So much for central banking. I think we're pretty much done with this by this point in time. Hiring also rose slightly in leisure and hospitality, finance and wholesale. To be fair, leisure caught in that prior jobs report. It was by and large government and leisure. But in this report, it was still government that was still a big component of the jobs picture. The increase in employment in May, this is what they've been doing, was cut to 281,000 from 306,000. So Bidenomics is all about smoke and mirrors. You hear about Bidenomics. What does it mean? It's all fuzzy math. It's all BS. So what they do is they come out with a jobs headline number of the expectation by the markets is 200,000 jobs, 225,000 jobs. They come out with a beat of 306,000. They've done this over and over and over and over again. What do they do the following month? They reduce the prior month's read back down to a number that was pretty much what was expected. So the shenanigans are ridiculous, and they keep doing this over and over again. For whatever reason, they didn't do it last week. Unless, of course, they did do it last week, and they're going to revise that number down to an even worse number than what was expected. That wouldn't surprise me in the least. Another sign of softening labor market, the number of hours worked. This is a forward-looking indicator. The number of hours people worked fell a tick to 34.3 and matched a post-pandemic low. Businesses tend to cut hours before resorting to layoffs when the economy slows. Very, very true. You see this time immemorial, and it's back. Again, we are at the post-pandemic low. Moving on to earnings coming out, or not earnings, to data coming out this week. Not much in the first part of the week. We have NFIB business optimism, not a market mover. We may as well just skip. Let's skip to Thursday. Sorry, folks, dry throat. And that is CPI, Consumer Price Index. That is going to be very, very important. That's the measure of inflation at the consumer level. Don't focus all too much on this number here. This is what you call the headline number. You want to pay attention to the core number. That's what the Federal Reserve pays attention to. Then on Friday, you're going to get the Producer Price Index, the measure of inflation at the producer level. So are producers seeing input costs increase, and are they passing those costs on to the consumer? We'll know on Friday. So these are two important numbers coming out this week. I would argue CPI more important than PPI. Now, it seems as if there isn't a weekend that goes by. I don't go live on a Sunday night where there's a new, just mind-boggling series of fraud in the government. So here we have our esteemed, the Honorable Energy Secretary Jennifer Granholm. This is the one that wants to ban gas stoves. You can't have a gas stove, but before she leaked out, or before she decided that they were going to drain the strategic petroleum reserves out of our stockpile of petroleum, which we save for emergencies like war, she consulted with the Chinese government. She called the Chinese government to get their blessing. And when you take a look at where we're at now, Granholm leaks U.S. energy policy to China. Strategic petroleum reserves take a nosedive. If you want to know where oil prices, you're going to have to use your imagination. If you want to think about where oil prices would be without this decline in the SPR, you got to factor that in. Now that we're pretty much done with what we can drain out of there, oil prices are moving back up. The reason why they did this is they wanted to salvage the midterm elections in favor of the Democrats. And the shenanigans that are going on with the fraud that is climate change, look no further than who benefits, who does not. Annual CO2 emissions, China ripping through the ceiling, the United States in a decline. Yet they want us to no longer have petroleum as a part of our ecosystem, our energy policy. They don't want us to have a natural gas stove. They want you to drive an electric vehicle, even though the input cost To create that electric vehicle, it takes years for that vehicle to uh, make back what it's already spent on its construction in terms of CO2 output. Not only that, they want to drain an already stressed energy grid and get you into a electric car. And they know that most people can't afford one. They don't want you in a car, period. They want to ground you. I thought there was something else here. I think we covered it all. And all the while that we are kowtowing to the Chinese government, over the weekend, we got a flotilla of China and Russia sent a huge naval flotilla towards Alaska. U.S. responds by sending destroyers. A large joint Russia China military exercise, which is being described as unprecedented in size, has sparked alarm in the Pentagon, given it took place off Alaska, causing the U.S. to dispatch 4 Navy warships and aerial assets. In the same waters, a very rare move, itself a significant size. So we have drained our strategic petroleum reserve. We have a energy secretary who's consulting the Chinese. We have Hunter Biden and Joe Biden in the pocket for the Chinese CCP. And now that we have given up or given away a lot of our munitions over to the Ukraine, we have demoralized our military to a point where people don't want to stay on in the military. They're getting out. They're not meeting their goals for recruitment. And you wonder why we're getting this now, a test of our strengths and weaknesses. This is going to continue until we get some resolve and we fix what's wrong in Washington, D.C. and the corruption that's in our face. And we got to get rid of this uniparty because the Republican Party, to me, is dead. Dead. Expectations for a Federal Reserve rate increase in September is growing more and more unlikely, folks. The probability is very unlikely at this point in time. This is notched up since I last looked by a half basis point. We were at 87.5. Now we're at 88. Earnings coming out this coming week. Palantir, Lucid, Ring Central, Beyond Meat. Oh, my God. Tuesday, UPS, AMC, Rivian. Does anybody like Rivian cars? I think those cars are the most ugliest things out there. The nose, the headlamps, they drive me crazy. Twilio, Walt Disney, Win, Illumina, Alibaba, CyberArk, that's a good stock. Yeti, good stock. So it appears as though earnings are beginning to wind down. Not at all. We still have NVIDIA that needs to come out, not this week, but I believe the following week, I want to say. Moving on. All right, to multiples. So last week, we saw a down week in the equity markets. There was a lot of technical damage done last week, in particular on Friday. Yet we still have a PE multiple on the S&P 500 at near 31. Yes, this is down finally from last Sunday, but not by much. Think about it. You had all these earnings that came out last week. You had a down market, yet we're only down fractionally on the Shiller PE ratio. Now, how do earnings look? Not that good. Revenue growth. S&P 500 is reporting year-over-year revenue growth of 0.6, positive 0.6 for Q2 2023, which is the lowest growth in revenues for the index since Q3 of 2020. Yet, we have a multiple of near 31. In terms of technicals, triple Qs broke weekly support last week. I think they're going to rally this. They're going to try to recapture let's call it 374 on the trip Qs. But I think ultimately, maybe it'll take a week, maybe it'll take 2 weeks. It's going to fail, and we head lower. No guarantees. That's my hunch. In terms of, oh, by the way, we're using TrendSpider, link below, 35% discount code, and seasonality. We are in a period which is not wonderful. I mean, it's not bad for August, but in September, it's really not a good month whatsoever. So these next 2 months are a little iffy. Now, taking a look at seasonality, and this is data going back 24 years, on a weekly time frame, for the next few weeks, it's like a 50-50 market over the course of the next 2 months, whether it be up or down. So flip a coin, that's where the market's going. In terms of performance of on a ratio basis, the equal weighted triple Qs versus the triple Qs, which is biased towards the 7 top stocks in that index. You can see that those 7 stocks are now declining because the equal weighted benchmark is now moving up on a relative basis versus those top 7 names. They are correcting. Apple, namely, took it on the chin last week. Amazon, not so much. That got bid up higher. We shorted Amazon midday on Friday, selling a naked call. I didn't even put on a spread. I was so confident. We sold a naked call deep out of the money. We're up 20% on that. We'll try to take that off the table tomorrow, hopefully with a 25% profit or more. So the top names in the triple Qs are now pulling back relative to the equal weighted benchmark. The S&P 500 is reporting a year-on-year earnings decline of 5.2% for Q2 2023, which is the largest decline since Q3 of 2020. Yet, and it's the reason why, the Shiller PE ratio is near 31. This market has no business being where it is right now. That's why I think any rally is to be sold. We have a hedge on in our portfolio. We are pretty much neutral. We have cash flow strategies on, strangles cash flow strategies with a bias to the short side. But I felt it necessary to begin building a new short position using long put spreads on the Qs to help protect us in case we get a swoon down and we need some protection on that put side of all of our positions, just in case. We want to be careful. You don't, if I lose money on those put options, I'm not going to cry about it. You don't cry about not getting into an accident after you paid for your auto accident coverage, your insurance coverage. So I'm not going to cry about it. We're basically flat on that position right now. If we get a rally, so be it. I may add more because I think the rally is going to fade. Rates, credit, and geopolitical inflation. This is what it all comes down to. Last week, we had Fitch come out and downgrade our debt. What had happened to the 30-year Treasury yield? It broke out. It had already broken out. Honestly, it pulled back last week. But this is broken out beyond multi-year resistance level. I should say multi-month, to be fair. And actually multi-year. It's multi-year. So yields moving up higher, although they pulled back off their highs on Friday due to the fact that you had that non-farm payrolls number, which came out weak. Now, this is what I've been talking about. It's finally getting play on Twitter and on Zero Hedge. They're finally starting to take notice of what we've been talking about here for months. 2-year, wrong chart. I think they linked to the wrong chart. They did. This is 30-year Treasury yields. They linked to the wrong chart. I have this up. 2-year yield versus 10-year yield, much less inverted. Don't pay attention to this chart. They got this wrong. This is the chart you want to pay attention to. Here. 2s versus 10s, Treasury yield curve up on the month. We are flirting with the upper band of resistance. We have momentum beginning to hook up. And as I always say, that once you get the steepening on the yield curve, that's when equities take it on the chin. Pay attention to the rising yield curve. We are watching it here like a hawk. And when we take a look at the performance last week on the yield curve, we broke out. Now, for the first time in quite some time, we have higher lows and now a higher high. We didn't get a higher low back here, and we didn't get a higher high. Ultimately, it failed. Now we have a higher low and a higher high, and it looks like it's game on with the steepening of the yield curve. To be fair, though, I don't want to talk my book. That monthly resistance should act as some sort of resistance from which it's going to take some time to break out and above. Next month, we're going to have to pull back, do a retest, and then probably head up higher. So, am I doing a chicken little sky is falling? You got to short stocks now? No, no, I would not do that. I would wait until later on in the week. Look at your weekly charts. Are we testing weekly resistance? Think about this way. What I'll be looking at this week, let's get rid of this. What I'll be looking for this week is a rally back up to, let's call it 373, 374 per share on the triple Qs. I will then be looking for topping action, probably on a 15-minute to a 30-minute chart. Are we looking to fade? Are we putting in a potential double top? Are we breaking down to new lower lows? If we get a checkbox there, check that box, then I'm going to be looking to lean into the short side on the triple Qs, even more so than what we are at current. We are not net short. We are net neutral on the market. We're just collecting cash flow. We're collecting premium. That's it. That's a strategy. What else do we want to go over here? So this article here, which I started with, and I want to point out to credit and geopolitical inflation. This is important because if we get a slowdown in the United States, yet inflation remains sticky, that's going to be a major problem for the U.S. economy due to the fact that the U.S. dollar is going to weaken up. I don't think that we're there yet with the weakening of the U.S. dollar, but we could be. If that's the case, inflation is going to rise because the dollar is going down because we import so many manufactured goods. I've talked about the reindustrialization of the United States. That's going to take a decade or more to do. So it's going to take a while to onshore all of that production, and all of it's not going to get onshored. It's going to take a strong U.S. dollar to keep inflation at bay. Now, what we're going to be paying attention to here is the DBC. What's the DBC? It's a index of many, many different types of commodities, mostly energy. It's got gold in there. It's got zinc. It's got sugar. It's got a lot of T-bills, to be honest with you. But on the day on Friday, we broke out. So we appear as though that we're getting ready to break out to new higher highs on the DBC. What does that mean? Inflation is rising at the input level, meaning core components of what it takes to build stuff, oil, you want to make food, you want a cake, sugar is a part of this. So it's a very broad basket of metals, energy stocks, energy, I should say. And if it goes up higher, you can bet even though the Federal Reserve backs out food and energy out of their view of where inflation is going and they focus on the core number, that doesn't mean that higher oil prices do not impact the core. Example, this is the example I always use. Pretend that you're a manufacturer of tires. Maybe rubber is flat. You're not even paying any more for rubber, or rubber prices are flat. What else does it take to make that tire? Oil. Well, they're not going to back tires out of the core CPI, but oil is going to filter into the input cost of those tires, driving up the core price, even though the Federal Reserve backs out food and energy, because it suits them. So those are our headlines for the new trading week. So to summarize, early on in the week, I think we're going to rally. Let's bring up the futures. Have they gained momentum? Have they lost momentum? S&Ps, they've lost a little bit of momentum here, but I think that we're going to put in a higher low. Let's put up an alert here. I want to get notified if we take out the highs. Let's take a quick peek at the NQ. This is the NASDAQ 100. NQ. Well, the NQ is backing off because it's at resistance. I'm going to create an alert here. I think ultimately they're going to rally this market tomorrow. The question is, does it hold its gains? Like Friday, I mean, Friday was an absolute bloodbath. Take a look at the Friday's price action. Opened up, really nice, strong morning. All of a sudden, puke. This is what they do. They want to get everybody excited. Maybe they'll put out a couple of upgrades. Maybe they'll have Warren Buffett on CNBC. They'll get everybody excited, and then all of a sudden, they pull the rug from out underneath you. Don't let this be you. The way that these corrective act, the way you put in the bottom in any type of correction is that you don't wake up to bright green futures. That's not the way it happens. You wake up to red futures, horrible futures. The pit of your stomach is aching because you feel sick that the futures are red yet again. You have a potential margin call out there. Your broker's calling you, whatever. When you get that feeling of sickness, when you get that feeling of misery, that is probably the bottom. And when that market opens up lower, yet then reverses to close higher, that is what sends the short to scurrying. They cover. That's your bottom. This is not a bottom. Not when you break weekly support. When you start breaking weekly support levels, get ready, buckle up, especially when you have the yield curve now steepening. Let's do some chart requests. I'm going to bring on our IBD just in case we need some fundamental data or short interest data. Now, I believe I know PLTR is reporting this week. Is it RBLX that's reporting this week as well? So be forewarned. I will not be playing these whatsoever in advance of earnings. Post earnings like we did with Amazon, sure, why not? So weekly chart, Palantir, bearish key reversal. I suspect that we should pull back to the support level and do a retest. Does it break? I don't know. If it does break, we're going lower. But all we did here, the trend is still up. This is still in an uptrend, right? All is right with the world with PLTR. All we did is this. We hit the upper band of the rising uptrend channel. Doesn't mean it's dead. Just means that it got too extended. Simple as that. So now you got to wait. We are very extended on weekly stochastics. This is a momentum indicator, and we are flatlining here. I suspect that this may roll over. Now, in terms of volume is very high. That was a distribution week last week. Daily view. Daily view, we broke the lower band of the Keltner channels. We closed at 1820. I think we're going down to 1786, which is the next support level on PLTR. Daily stochastics are rolling over. Be careful here. You're beginning to see pressure on momentum, and that's not good. And when you see stochastics trading down below 50 and declining, rallies tend to fade. What does a rally look like that's faded? Well, you saw it on the NASDAQ and on the S&P 500 on Friday. Daily stochastics on the NASDAQ are negative. They are declining. And what happens is that they start off strong and all of a sudden they just fade. Rallies tend to fade. The markets send you signals. Don't ignore those signals. So PLTR earnings next week, just be forewarned, it's looking weak in advance of earnings. RBLX, Robolox, weekly view. Not looking good here. We broke. This is the volume by price 25. This is the basically the moving average for volume, and we broke down below it volume by price. So that's a pretty significant break. I think we're coming down here. Actually, there's a support level below here. Hold on. We're at support. We bounced off of it 37.22. If that fails, we're going down to 35.76. Excuse me, 35.76. Stochastics are rolling over a lower high on stochastics versus this prior high. Daily view. Bearish key reversal bar. Folks, if you're not familiar with the terminology I'm using, link below. 5-part video tutorial. My top 5 favorite candlestick patterns. Free. It's linked below. So, bearish reversal bar on Friday. Volume was below average and declining sequentially. Take your crayon out. Do one of these numbers. But it still looks pretty bearish. At best, it's consolidating. At worst, it breaks down to a new lower low. I would not be a buyer here. We have not been given the signal quite yet. Momentum on a daily time frame is beginning to bottom out, but this could stay oversold, quote unquote, oversold for a while. So be careful. What you could be seeing here is this, is a W formation. Here is the left side of your W. Here's the pivot point right here. Then what you want to see is the right side of your W. So here you have it. Left side, pivot point, right side. We'll see if it plays out. What else do we have? APLS. Franklin. Hey, brother. APLS. Apellis Pharmaceuticals. This thing's been left for dead. So it looks like an event took place here. Wow, this is trading up at 90 bucks a share. Is this optionable? And if it's optionable, what kind of IV? Wow. Did they report yet? APLS, have they reported? If they didn't, or if they have reported, and that's in the rearview mirror, I would be interested in trading this, but I would not use a naked put. This is a pharmaceutical name. Use sell a put spread. That's what I would do. That's the sale of an out of the money put option, but then a purchase of a deeper out of the money put option as protection. That's your insurance policy. Look what happened here. Had bad news. God forbid this thing's getting another bad news. If it went down the same percentage basis, this thing would be trading in the single digits if that happened again. So make sure you're using protection if you decided to put on a put spread here. They have reported. Thanks, Pete. That's interesting. So there's a lot of premium left in these options, even after earnings. So this is a good earnings trade, excuse me, a good options trade, but make sure you do not make it a standard strangle. Please, please do not do that. Do not sell a naked call. Do not sell a naked put. I would put on a iron condor. That's what I would do here. I would sell 2 out of the money options, a put and a call. Then I would buy 2 deeper out of the money puts and calls. That way I collect the credit. But if things go wrong, I have insurance. Because if this is a pharma name, different breed of stock than any other stock out there. If this reports positive news, it can crash up. One of the few sectors that can do that. So be careful. That's the way I would trade this. Is Iron Condor. That's my shot here. Oh, in terms of technical analysis, I should have gone over that, I guess, because it doesn't look like it's going anywhere soon. But we're on a monthly chart. Let's spend a moment here. We have a new monthly lower low. Momentum is still declining. Weekly view. We have support below at the lower band of this volume shelf. Volume is still heavy on a weekly time frame. Let's take a look at a daily chart. Daily chart, we've stopped going down, and we're respecting that volume shelf. So here's the play. Here's what I would do here. Let's go to a 30-minute chart. Yeah, they're beginning to bid this up. Note how we're in a new uptrend channel here. I know that because the trend lines are automated. So what I would do here is, if your end goal is to open up an iron condor, I would sell the put side first. I would leg into that trade. I wouldn't open up an iron condor right here, right now, because I think the bias is going to be moving forward to the upside. So why sell that call side wing now when you expect that it's going to move up higher? I would sell the put side now, wait for the shares to move up higher, and then sell that call side on the iron condor. That's what I would do here. That's the contrarian way of doing it. What else do we have? We did LFVN, TPN for Trader Isaac. Oh, I haven't taken a look at this one in a long time. Wow, it broke out. Makes sense. The transports have been on fire. This is a very volatile stock, folks. So this is a weekly chart, but look at what you have here. What's this dashed line? This is not weekly resistance. What this is quarterly resistance. And we broke out above it last quarter, continuation breakout this quarter. Would I be a buyer here? Probably not, because the transportation stocks pulled back last week. This has already had a heck of a run, and we're at a resistance level, this volume shelf here, and the equity markets are beginning to weaken up. So would I want to chase this? No. And on a daily chart, you had a bearish engulfing, not close to one, not quite, but close enough for government work, an outside reversal bar or a bearish engulfing of Friday's move. Now, that's one of our top 5 favorite candlestick patterns. Link below, 5-part video tutorial, free. Volume was heavy on Friday. I'm not a buyer here. I think it's probably going to pull back further. If we revisit, let's say $20 a share, I would entertain it. But the transportation stocks have come a long way very, very quickly, and they took a pause last week. I would be very, very careful with initiating new positions in the transportation names. DKNG for Franklin. Now, this is a consumer discretionary play. So, honestly, the consumer discretionaries behaved better last week than staples. So I was kind of surprised to see that. Now, DraftKings hit resistance at $34 a share last week and backed off, and did so on volume. We're pretty extended here. I think we would need to revisit $28 a share. Yeah, man. This is a failed breakout on Friday. They tried to break it out. Sellers moved in, and they did it on volume. Let's take a look at what this bloodbath looked like on Friday. 15-minute chart. So you wake up. It's August the 4th. Beautiful summer day. All is right with the world. Your DraftKings stock is moving up higher at the open. You decide, you know what? Hey, I'm going to average up here. And you didn't wait to the final hour of trade, which is what I profess that you do, to avoid this utter annihilation of what the whales like to call dumb money. Coming in, I can't get my, there we go. Coming in, and they sold into that pool of liquidity. It did recover somewhat by the end of the day, and it closed back above a support level, But right now, this is a show me stock. It's got to show us that it could pull back, put in a higher low, or hold prior support. It's got to do something. But right here, I would not touch this stock. I wouldn't short it, but I wouldn't buy it. APLS. I didn't go over that one. I have that written down. APLS. Folks, if I could ask you, please, I really love doing this. If I could ask you to give me a like, subscribe, it helps me with the YouTube algorithm a lot. Hit the notification bell so you can catch us when we go live next time. But please smash that like button. Helps me out. Thank you very much. APLS. Oh, we did this one already. We did APLS. Tom, I don't know if you just checked in, but I did that one already. Just go catch it on the replay. Okay, Netflix. LFVN. I didn't go over that one. I'll do that one now since I have it up. I thought I did that one. Then we'll go to Netflix. Okay, so LVFN, automatically, do not buy this stock. Do not buy this stock. How do I know? The automated trend lines are telling me, don't touch. Click of a button. Trend Spider, 35% discount code below. If you're not using it, you're wasting a lot of time. It's invaluable. So what you need to do here is you need to wait for the breakout. Maybe it will. Maybe it won't break out. I don't want any sensitivity. All I care about is a close above resistance. I set it and forget it now. I'm not going to think about this stock until that alert fires off. Or I see another better setup on a weekly chart. Nope. Not a good setup there. That's a potential double top. Not saying it is, but it's a potential. Daily view. Daily view, not looking good. We broke the lower band of the Keltner channels. We did find support here at 490 per share. In fact, sorry, we broke it. The red circle implies we broke it, and we're rolling over on Stokes. I would avoid this stock right now. Better fish in the sea. I would not touch this. Way too much overhead supply. You need a retracement on LifeVantage Corporation. I don't know what they do. You're welcome, Frank. Have an awesome night, my friend. See you in the morning. Yep. All right, Netflix. We're going to leave it off with Netflix. Maybe I could take, Micron. We'll do Micron for TZ Burton, and we'll call it a night. All right, so Netflix, I have a position here. It expires. This is a strangle on Netflix. It expires on September the 1st. I think that's a Friday. I probably won't have it until then. We've made money here. I'm probably going to close this out maybe even this week if we get enough time decay that comes out of it. Monthly chart, we got stopped at resistance. We were selling calls up there. Now we're in the middle of a trading range. Weekly view. We closed up on the week, which is pretty respectable in the face of a down market. But you have a big topping tail here, implying that, you know what, there are sellers above in this price range between 444 and let's call it 453. So I'm not a buyer here. I think that there's going to be more selling pressure on Netflix in the coming days and weeks. It held up well on Friday, quite even possibly a higher low. Could we break out? Of course we can. But I think that this market is going to rally early in the week and then it's going to fade. That's my hunch. So that's Netflix. I wouldn't be a buyer here. I would wait for the breakout above 445. The caveat there, if it breaks out and closes above 445 on a daily time frame, the market must be up to and it must be up on reasonable volume, at least average volume. If the market's not participating yet, Netflix is moving up higher, shrugging off the rest of the market like it did on Friday, I'm not a buyer. It's not going to hold up. It won't hold up. Let's leave it off with, have a great night, Sean. Let's leave it off with Micron. Dan, have a great night, pal. MU. Let's go to, now they've reported earnings already. I got to tell you, the monthly chart looks pretty darn good here. What I'm looking at here on a monthly chart of Micron is a nice big cup, and it's building the right side of a base. I think that we need to move higher before we create that downward sloping handle. If one ever gets created, it's not mandatory, of course, but I do think that if the market holds up, I think that Micron is going to break out. In fact, we already have broken out. We've broken out on Micron monthly chart. Now it's under pressure. The question is, does it close above support? Weekly view. Not a horrible chart. I got to tell you. If this stock closes above $70 a share and the market is rallying, I'm not going to be doom and gloomish here and say all is wrong with the world. If the equity markets recover, there are certain names out there that are going to do very well. Micron's going to be one of them. But remember, the semiconductor holders last week broke support. Daily view. All right, so we have a daily breakout. We may pull back and do a retest of $68 a share. We'll keep a little bit of sensitivity on there. Not that much. Take some off. There we go. And that should happen pretty quickly. RB, have a great night, my friend. Folks, thank you for being here. Have a profitable trading week. Hit that like, subscribe button, please. Don't forget my 5-part video tutorial, my top 5 favorite candlestick patterns. We also have a 30-minute chart club, which is a private live stream where I didn't do it this weekend. I did it last weekend, where we do a deep dive into the 30-minute charts that we like the most going into the new trading week. It's a private live stream due to the fact that we are focused on the charts. We don't go into side conversations. We do here sometimes, and it's fun. It's all good stuff. And sometimes here we get spam. So we don't want spammers, so we keep it private. So if you use that link below, enter your email address, you'll get the invitation to the next time we do the 30-minute chart club. Join us. It's always a good time. Folks, thanks for being here and have an awesome, awesome trading week. Be well. Kelly, I just saw you. I want to acknowledge you. Thanks for being here. Ugh. You watch the replay. You're fine. Have a great weekend, folks. Have a profitable trading week. Take care.